Hello, my name is Mike Hodgson. I'm the CEO of Serabi Gold and pleased to join you today on the 11th of April to give you an update on our first quarter's production of 2025. And good news, it is indeed.
Well, it looks like it, Mike. So why don't you start with the numbers and I'll dive in with some questions.
Okay, well, we've produced 10,000 ounces for Q1, which followed the 10,000 ounces produced in Q4. So we're certainly maintaining that rhythm. The ore sorter's working wonderfully well at Coringa. Palito grades are up very healthily. And as I say, we have guidance of around 45,000 ounces for 2025 in total. So a 10,000 ounce start is great. Investors might think, well, 10,000 ounces is not 1/4 of 45. Well, the first quarter was always going to be a lower quarter, a little over 9,000 on the budget. So we've actually improved and we've generated about sort of 800 ounces more than we actually planned, which is great news. And next quarter will be a little bit more, like 11,000 and 12,000 in Q3 and 12, 13,000 in Q4 to get to the 45. And obviously we've done this under a wonderful gold price and a very preferable exchange rate, very much in our favour.
Right, okay, a lot of things going in your favour when it comes to gold price, also exchange rate, as you say, but you've done a lot too, so I want to kind of get into that. And one of the kind of enablers of that is the amount of cash that you're generating. So where are you today, and so what are your expectations for the rest of the year?
Well, cash, we ended the year with $22 million in the bank. Ironically, at this point last year, we had about $5 million in the bank, and we anticipated end the year with 8. Well, that 8 became 22 because this wonderful gold price or economic tailwind we're enjoying started in the middle of last year. So that's been great. It's continued in Q1. We've generated probably close to another $5 million of free cash flow. I think we are anticipating about 1. In our budget numbers, so that's wonderful. And so if this continues, well, certainly we've been using like $2,400 gold and 5 for an exchange rate for 2025. So if you plug in today's numbers, we're going to be generating a lot more than we anticipated. Our forecast for the year, and that's 45,000 ounces, will probably about another $15 million on top of the starting of the year number of 22. So people can do the maths. If you plug in today's numbers, we're going to be generating a good bit more than that. So, yeah, it's a great time to be a Brazilian gold producer for sure.
It is. Let's talk about what you do with that money, what you potentially could do with that money, because you've kind of laid out your plans early on with regards to exploration, say, which is obviously the kind of growth component here, as well as producing more ounces. So, does that change any? You didn't get to increase the budget on that?
Well, last year was very much a capital-heavy year, and we still came out the year with a lot of cash in the bank. We were ramping up Coringa ounces a lot. We were building the crushing plant and the ore sorter at Coringa. These are all now operational. Our pathway now to go from 38,000 ounces last year to 60,000 ounces in 2026, by the end of 2026, is pretty much written in stone now. The only appreciable capex we have in the mines is the ramp up of production at Coringa. So we're preparing Coringa to be a bigger mine next year than it is this year. So we're, in a way, overdeveloping Coringa this year. Over and above that, no plant capex, no other capex, no real fleet capex. The other thing we're doing is about $10 million of brownfield exploration. And that's split fairly equally between Palito and Coringa, about 15,000 ounces at each mine site. The purpose of that is to actually move our group resource inventory from the current 1 million ounces, which is split 50-50 across the two sites. And our objective ultimately is to get to 2 million ounces, but certainly at least reaching 1.5 million ounces and a halfway house. The reason we're doing that is because we are a plant-constrained business. We always have been. We are getting more ounces out of our process plant. We're getting to 60,000 ounces by using ore sorters at both mine sites and concentrating that ore, pre-concentrating that ore before it goes to the process plant. Essentially, our same process plant is now being fed with a higher grade than it was historically. With this brownfield exploration effort to actually increase our resource base, the idea is by 2026, we'll have a big resource base to actually increase our production rate and think about going to 100,000 ounces. We can't really, people might say, well, okay, if you've got this extra cash, spend more on exploration, do more. It's not that simple. We're spending $10 million on exploration now. That is a lot of work. It's 4 rigs turning with our team, and just getting results turned around and doing it properly and being a results-driven program. We couldn't really go there anymore. If we did, it would be wasteful. So 10 is a good number to do it sensibly. and that's exactly what we're going to do. So it would mean, with generally the amount of money that we are likely to generate in cash flow this year, we're still going to generate a lot of cash, and I don't think our current shareholder base would like us to sit with that amount of cash in the company. So I do put in my quote that we are looking at all kinds of mechanisms available for shareholder returns, because I think, for the first time, and as I've been CEO of the company, it's a wonderful thing to be able to say that.
When you talk about returning, returns for investors, you're talking about share buyback or dividends, dividend allocations. Any other options available to you?
They're the two principal mechanisms. Yes, we're the board's we're discussing that at the moment. We know we can't sit on this amount of cash. That's the bottom line. It's interesting. Some shareholders prefer the former, some prefer the latter, but we're certainly looking at trying to do something with some of our free cash flow.
Some don't mind a bit of M&A if it's the right type of M&A.
Always looking. We've continued to look as we've been doing. We're on this wonderful organic growth pathway, which we're following at the moment. And yes, we continue. It's part of my job, continue. The door's always open. The phone's always available. We keep we've had a number of discussions with various groups, as every junior has to, and that's still certainly the case as well. And I do believe with our cash generation, we will be a very attractive company for someone to do something with down the line.
Okay, well let's stick. Okay, so that's maybe something nice coming down the road for shareholders. Let's talk about the exploration, the kind of growth components of this, which is always exciting. So you talked about organic growth, which is great because it's the most effective, cheapest form of growth, or should be. In terms of land consolidation, and are you doing any of that? What do you? I mean, in fact, what have you got in front of you? What's the path in front of you look like? What's the known data?
The brownfield exploration, which is what we call, is essentially headframe exploration, whatever you want to call it. I mean, at Palito, we've actually got a series of veins, which are around 50-odd veins. The resource today is over a strike length of about 1 kilometre. The indications are that those ore bodies or those veins continue for about 4 kilometres. We've got sort of drilling more distant from the actual mine site. We've now almost joined the dots and joined one or two of these veins together. If we just drill the gaps there, we could be sitting on a 2 million ounce resource at Palito, sorry. People might say, well, why haven't you done that? Well, one, we've never had the money to do it. And B, why have we needed to do it? I mean, we're a mining company. We've always managed to, with the drilling that we've done, we've never had to do resource growth because we've always replenished the ounces that we've mined. We've got a history of great resource replenishment at Palito. We started the mine with 500,000 ounces way back in 2005. We've still got 500,000 ounces, and we've mined 500,000 ounces. So these veins, we just keep finding more veins. So the potential to actually increase we've now got a real reason where we want to grow the resource, because we want to grow the production base. So we need to do that. Coringa, on the other hand, is a new mine. The drilling, it's a very underexplored project, gold operation. We have an 8-10 kilometre long zone where the Coringa ore bodies all lie on. They're all along strike. And there's gaps in between each of these mines, where Coringa is basically 5 artisanal mines, where the resource today is just the drilling underneath those artisanal mines. There are a lot of gaps between those little open pits in the hard rock below. We're now drilling those gaps out. If 50% of that comes up, we're going to increase the Coringa resource by 250, 300,000 ounces. Huge. Over back at Palito, in the Palito exploration tenement, we've got a very interesting property called São Domingos, which we drilled initially in 2021, and we got 7 meters at 200 grams per ton. Fantastic. We couldn't really we drilled more holes there, and we couldn't really make head and tail of it. The geometry of the whole thing looked a bit weird. We've just spent about 4,000 meters drilling that in the last 4 or 5 months. And we're putting it all together, and we've got a very different type of, but a super interesting prospect there, which is looking like so far about 100,000 ounces, not 43-101 compliant, I must stress, but in-house numbers, like 10, 12 grams, 100,000 ounces. We're going to do one more round of drilling there, and that could be a super little satellite, much as Sao Chico was for Palito back in the day, to actually supplement. I mean, I look at that and I think, hell, that could be another sort of 5-year, 20,000 ounce plant feed for the Palito plant. And I don't discount the possibility of replicating the Coringa model and putting in a little crushing plant and a third ore sorter and trucking a pre-concentrate from that little satellite to Palito. The idea of all of this is to grow the resource base for the group to actually be sitting here in 2 years' time and say, we've got 2 million ounces, we can easily support 100,000 ounces of gold production, and we might have an ore sorter trucking a pre-con from Coringa to Palito. We might have Palito with its own ore sorter trucking a pre-con or moving a pre-con to the plant, or we might have a third plant, a third little crusher and ore sorter at São Domingos trucking a pre-con, again, all to the Palito plant. The hub and the spoke model we talked about in the past, where the Palito plant ultimately is where the gold's produced, and we produce these pre-cons around. And all in and around Palito, we've got an overwhelming opportunity to find a fourth and a fifth. So that's the way I look at it. And we've got M&A opportunities in the region where there are a number of private deposits which are also ripe for to fit into this model. So we will always keep an eye on those as well.
Yeah, no, I can see that São Domingos is pretty interesting. Those grades are incredible. I was talking to someone last week about mobile ore sorters, and I wonder what the use cases of those things could be. The one which hasn't been talked about for a while is obviously Matilda, the copper gold porphyry discovery. What's your approach with that? Is that part of the conversation this year, and if so, how?
Well, we used Vale's money back in 2023-24 to advance 7 tenements which were coming to their expiry, and what you have to do in Brazil is submit 5 final exploration reports to turn them into mining tenements, which means you then got them permanently. Matilda was one of them. We used Matilda as kind of the sprat to catch a mackerel in a way. We that was what they wanted to do, so they did about 50% of a $5 million spend on that, and we then used the remaining $2.5 million to spend on the other 6, which is more high-grade gold material, São Domingos being one of them. So the 5,000 meters we've just done at São Domingos was largely funded from that Vale Base Metals money, which is great. Matilda itself, as I think I've said to you in the past, is something which we will just hopefully join in forces with a group to have an earn in, or they earn in on it, and we get an income stream from it. I just think we haven't got the plant for it. We haven't got the balance sheet for it. It's too big for us. It's going to be big. It's going to be complicated. It's going to be, a lot of exploration over a long time. It's not the right fit for us, but it's a great opportunity for someone to come in. So we are talking to groups, Vale Base Metals, past, as you know, to take it on, partly because of their own challenges themselves. We've since PDAC, we met a few groups at PDAC interested in picking it up, and so we're in discussions with a number of groups. That now would be something for them, and we just enjoy the ride really on that and have an income stream. But the alliance worked great for us because it allowed us to advance the other 6, and we're now working on those. But our exploration guys are hands full completely with the brownfield at the moment, so that's the big push at Coringa and Palito to get this resource inventory.
Okay, let me come back to this growth component, because all stories should be talking about growth. That's what we investors are buying into, the blue sky potential of what comes now. Look, 45,000 ounces spent this year if you hit the numbers, aiming for 60 in 2026. That's only not so far away, and 100,000 ounces run rate by 2028, thereabouts, right? So that's quite the journey you got to go on. Do you think that you can do all of the above out of cash flow? You got a lot of free cash flow being generated now. It's a question of how you allocate that. Would people want, because talk about dividends and maybe share buybacks, etc. But if you do that, will that kind of limit your ability to kind of get after this 100,000 from free cash flow?
We reckon if we actually use those spare parts of the plant at Coringa, we can do it all out of cash flow.
Wow. Okay. So we got we're going from 45 to 100,000 within a sort of 3-year time frame. That's what we're talking about.
Maybe a bit more, but maybe that's quite aggressive. But I don't see why we can't go on 45 this year. We can be pushing 60 next year. Maybe the year after might be sort of 70, 75, and then so it might not be Doing it 3 years might be, but we can certainly have very, very significant incremental growth over the next 5 years. Yes.
Without diluting shareholders.
Yes. Yes.
Okay. I like that story. Mike, there's not much more to say. That works for me. Look, thanks for the kind of quarterly update. It'd be great to see more of you. I know you've been sort of traveling around and you've been in country recently. Obviously, the team must be equally excited.
Yeah, no. Yes. It's been a great ride, a great year. It's been a very great first quarter. Second quarter should be, first quarter plus some more. So yeah, great time to, as I said right at the very beginning, we were exploring. We've got 4 rigs turning. Results are flowing. We've got the gold price like we've got. Production is, the plant's full. Grade's good. What more can you want?